last session, what I felt like I confused you on was working out your income tax or tax payable, right? So today I'm hoping to clarify those misconceptions. So eyes and ears towards the board. Thanks, team. Laptops away. Thanks. Okay, so I then tried to rewrite my notes and I just summarized it on only 2 examples for you guys to understand both systems, which I think is probably more relevant to you all. The 2 formulas that I focused on was net pay versus taxable income. Okay, so net pay is what you get from your employer. This is your pay from your employer, okay? Taxable income is what you pay to government. Okay, 2 different things, but they do relate to each other. So your salary is called gross pay, right? Then the minusing tax withheld. What I may not have emphasized clearly for you, if you got confused, this is just money that goes to the government so they get money first, okay? But they usually overinflate the tax that you owe them. So in each pay that your employer pays you, that already has tax taken out of your pay. So if it was 100K per year, each pay that you get, a bit of it goes to tax already, goes to the government already as it is. Okay, so this is paying to the government early. So I'll write here early tax. All right. In that early tax, once a year, they give you a form called pay as you go. This is a summary of the things in terms of how much tax you got and how much pay was taken out in that year. This tax withheld is not just income tax. So when we talk about taxes, there's all kinds of tax, right? Income tax just means tax from your income. That's all it means. So income tax is one of the things they take away. Another thing they take away, Medicare levy. So yesterday I introduced the idea of Medicare levy. Do you guys remember how much do you guys have to pay in your own tax for Medicare? 2%. So 2% of your taxable income will be part of that, and they'll be taken away too. Okay, so that's how they calculate it. So your overall net pay, this whole tax withheld, they all did that calculation for you, right? And your employer has to do that for you. So they do that every time they pay you. They take out a bit of tax. The problem is that this is all estimates. These are early tax. These are estimate tax. It's not the true tax that you got to pay. That's why you got to do your tax returns once a year. Yeah, you actually recalculate it. Now, next bit. Taxable income. This is where I think as we were doing the problems, we were getting confused, or at least I confused you on this bit here. Assessable income means all income that you receive. Doesn't have to be from one job, can be multiple jobs. So you can do private tutoring, you could do a part-time job. This is all the incomes added together. Then the only part that you had control, which is what I said yesterday, tax deductions. This is the only part that when we say, teach me how to do my taxes, this is the only bit that you learn. You can self-learn it on the website. You ask your accountants, they know tax laws, they can tell you what you can reduce. The more you know about the law, the more you can then reduce your tax by reducing the taxable income. Okay, because you can't change this bit. Assessable income is just what you get from what you do, what you make. But this is what you can do to reduce taxable income. Obviously, the more you earn, the more tax you have to pay, unless you can then increase tax reductions. Cool? All right. So we got that from yesterday out the way. Then I gave you a table. What I didn't realize about the table was that this number was already calculating for you if you earned from 18,200 to 45,000, that 19 cents for every dollar does add up to 5,092. That's what it is. I didn't realize that they already did the calculations for you here. Okay, so it means to actually work out your bracket is a lot easier because you don't have to do it per bracket. You just find your bracket and then solve it. So here's the example. Here's an example one where I tried to now give a sort of a more realistic idea of a student who has two jobs. So if you guys are someone who has multiple jobs, for example, you're working part-time. So I gave an example of Emily as a university student who works two part-time jobs. She works at a supermarket as an assistant, earns $34,000 in that year, and the employer pays $5,200 in tax early. Okay, so I'm going to write here, this is early tax. This is early tax, early tax. So she works at a supermarket and she also works at a cafe, right? So she earns two incomes, one's $34,000, one's $17,000. Now, out of curiosity, how many of us here do work? 1, 2, 3, 4. Okay, when you filled out your forms, no, there was 4 people there.
Yeah, no, I'm saying how embarrassing.
Okay, embarrassed. What are you talking about? So it means he can learn something from this. So when you filled out your forms to go to work, one of it, if you only had one job, one of it had a box called tax-free threshold. Can I get a show of hands if you remember that box? Only one person remembered ticking this box. Okay. The tax-free threshold box. Do you remember feeling it? Because every time you get a job, you're going to have to fill out one of these boxes, right? The reason why is when you do this, when you tick this box, what you're saying, because you know in that table it says here, you know how it says 0 to 18,200, it's free? Yeah? You're saying this is my main income, and so your employer does not calculate the tax for the first 18,200. They use a different table if they had to, okay? So when you tick that one off for the first job, so let's say Emily ticked off that box for her supermarket job, right? Then the employer only needs to know that bit so that when they calculate your tax early, they know what table they need to look at. Whereas your second job, you can't tick that. If you tick that box, technically you're not doing it right. And then your employers are doing it twice. The ATO then has to fix it for you. That's why you only tick one of them. But does it matter? No, it doesn't. Because you earn $34,000 and then you earn $17,000. At the end of the day, that is together, what's 34 plus 17? $34 plus 17. Come on, it's just right there. It's 51,000. So Emily still earns 51,000 regardless. I'm surprised that took long. 4 plus 7 is 11. Carry the 1. 1 plus 3 plus 1. 5, yeah? So 51,000. The point is, when you tick this off, it only changes for the employer. It doesn't change for you. It doesn't matter about you. It only changes the employer how they pay your tax back. Okay? So they have to calculate based on a table. So it doesn't matter to you. You just need to tell them which one's which. Now, let's go through the question so you can understand what's happening. Emily has 2 jobs. Emily earns 2 incomes per year. When we say calculate Emily's total assessable income, she gets $34,000 plus $17,000. Total is $51,000. Okay, so that's the assessable income. Remember, assessable income is all the income you receive. She's receiving a total of $51,000 in that year. Okay, so that's pretty straightforward. Next bit, it says calculate Emily's taxable income. Okay, so taxable income is based on how much income you have and then how much tax you can claim back. How much can we reduce? Now, based on the question, I've highlighted here for you, Emily also purchased teaching resources for her tutoring, and she's claiming $500 back in tax. That's what she's claiming. Okay? So that means taxable income is equal to 51,000. So this is how much she's earning. But she's reducing it by $500 that she's claiming back in tax. So that means her taxable income is now equal to 51,000 minus 500. So that's 50,500 bucks. So far, so good? Okay. Why do we need to know taxable income? Because if you know the taxable income, you can then use the income tax table. Then you can calculate what you owe. Okay, so here we go. So I'm filling it out. Let's go. Let's look at the picture. Total earned minus tax deductions. That's how much they're going to tax you on. They're going to tax on this. Obviously, if you deduce more, there's less tax on. Yeah? C. Calculate income tax payable. Now, a lot of students may not know what that means. This literally just means income tax. So how much do you need to pay to tax? Yeah? So that's what it means. So what type of tax is it? It's your income. So the tax is on income, but how much do you need to pay? That's what this means. So how do we do it? We use the table. We know at the moment she's earning $50,500 reducing from the tax deducted, not the 51,000. This is what we're going to tax on. So let's look back at the table. Where is 50,500? She's already passed 18,200. She's already passing 18,200 to 45,000. So she's passing 45,000 already. But she's in this bracket. So I know even though she's working 2 jobs, and we talk about this threshold, free threshold, because Jasper asked me early in the term about this. And it's the idea, yes, even though this was a tax-free threshold, it's more about overall, how much you earn overall. Okay, so they still calculate based on what you earn in total. So here, how do we calculate it? Your income taxable is 32.5 cents for each dollar over 45,000. So in terms of 45,000, how much are you over now? Let's have a look. You earn $50,500 minus 45,000 tells you the gap. You are $5,500 over. Okay, so here, how did I do it? I did, you are $5,500 over. Over 45,000. What's the table say? The table says your income tax is calculated by 5,092 plus 32.5 cents for every dollar. Thanks, team. Thanks. Just this bit here. Archie, Michael, thanks. I'm going to explain this bit here, and I do want you to copy the notes. Yeah, so laptops down, please. Otherwise, I find it highly disrespectful as I'm explaining this idea. And this is probably why it annoys me too. The number of times I hear kids tell me, oh, teach me tax, or like, teach me whatever. It's not that tax is hard. It's just the fact that you guys never wanted to learn to begin with. So no matter what I teach you, it's always irrelevant. Get me? So when students complain, to me, it's an entitlement. And that's what annoys me. It's more the entitlement that annoys me, not so much that you don't understand tax. Because most of this you can get by through life by doing nothing. Yeah? Going back to my point. This is your taxable income. The table says it's 5,092 plus. Now I want you to read that bit, plus 32.5 cents for each dollar. It sounds confusing, but you may not have realized that line there is simply saying out of 100 cents, they'll take 32.5. That's no different from saying they're taxing you 32.5%. That's what it means. So if you read this more carefully, this is just saying 19% of your money, anywhere between here, will be taxed. Here is 32.5% of your money will be taxed. Here's 37% of it, and here's 45% of it. That's all they're really saying. So when you first read it, boys, we just out of respect not to speak while I'm speaking, especially at this point here? Yeah. So from here, this is literally just telling you you're spending a third of your pay, 32.5% of your pay is going to tax. This one is saying 37% of your pay is going to tax, and this one is saying 45% of your pay. But obviously that's marking over people who are earning a lot more, right? So when you're working this out, you've already done percentages in chapter 3. So if you want to work this bit out, you already know you're in the bracket of 55,000. You know you earned $5,500 extra on top. So all it means is take 5,092 plus 32.5% of what you had extra. So 5,500. And so on your calculator, we've taught you how to do this in chapter 3. 32.5% is the same thing as writing 32.5 divided by 100. It's out of 100. Of means times 5,500. So on my calculator, I will type that. I will type 5,092 plus 32.5 divided by 100 times 5500. That will tell me how much total tax I owe. Essentially, it's just taking 32.5% of what you had extra. That's all it was. So here's my calculator. We know it was 5,500 times by 32.5%. So 32.5 divided by 100. That's it. So if I put it together, that's how much you pay in tax. So a third of your pay, 5,500, a third of it goes to the government. Plus 5,092 is part of the thing that you didn't calculate, the previous bracket. Okay, so if you add those together, that's how much tax, income tax, you're paying. So together, let's work that out. That gave me now 5,092 plus 1,787.5. That's the third of the pay that you had. This is the previous bracket. Put it together. This is how much tax. 6,879.5. Okay? Now, this is where students may not realize tax is not just on your income. Like I said before, there's like if you had HEX debt, if you studied at university or TAFE, you would likely borrow a loan. That also comes out of your pay too. But just to keep things simple, we're only doing tax, income tax, and we're also doing Medicare levy. Those are the only two things you have to know. Yeah? So, here it says, how much is your Medicare levy? And remember I told you in the last lesson, it's 2% of your taxable income that they will also take out as well. Okay, so they will take out of your pay. So not only are you paying income tax of 6,879.5, you're also paying to keep the Medicare system working for everyone in the country. You're paying 2% of your pay to that. But it's not your overall pay, it's the taxable income. Our taxable income was 50,500. So here we go. You're going to find now 2% of your taxable income, which is $50,500. Let's work that out. 2% just means 2 divide 100 of means times 50,500 bucks. So here we go. Let's work it out. 2 divided by 100 is 2% of, which is times 50,500. This is what you pay in Medicare tax, which we call it Medicare levy. Yeah. So that's now an extra $1,010. So when we're talking about tax overall, remember I said at the start, tax that they withhold from your pay doesn't just become income tax. There's also Medicare levy as well. So you're paying $6,879.5 from your pay, and you're paying 2%, which is $1,010. Together, it is $6,879.5 plus $1,010. This is your total tax, what they call tax liability or total tax payable. That's what you're paying in total, overall. Okay? Yep. that was the one that I paid over. So remember I had your gross pay was 51,000 because it was made up of 34K plus 17K. So this is what you get, but then minus tax deductions. She claimed $500 in teaching resources. So 51,000 minus 500 gave you $50,500 in taxable income. Does that make more sense there? So assessable income was 34 from supermarket, 17 from cafe. Total is 51,000 of income in the year. But she also claims that for tutoring, she's claiming back $500. So we're taking that assessable income, take away tax deductions. That's how much they're going to tax you on. So obviously, if you change tax deductions, the more you can deduce, the less that number would be. And that number is what we use for our income tax. Yeah. So I then used 50,500, and I said, all right, 50,500. Let's look at the table. Table says if I earn more than 45,000, which is from this point, 50,500 is how much more than 45,000. So then I went on my calculator and I said, all right, 50,500 minus 45,000 tells me how much of a gap. And that's how I got 5,500. So that tells me I am $5,500 over the 45,000 mark. So for every dollar on this amount, they're going to tax me 32.5% of it. So out of that 5,500, they take out 1,787 to be the tax. That's the idea. Okay, so together, you're tax liable for, what is that? This plus this give you 7,889.5. Okay, I'm going to pause for a second here. Does this make sense of what's happening? So we can see two jobs. Supermarket job, cafe job. Together, so two jobs, total income is 51,000. 51,000 we minus tax deductions. That's the only thing you can mainly control. Yeah? This is now what we call taxable income. So that money is what they're going to tax you on. But they use the table to figure it out. So 50,500, we looked at the table and we saw 50,500 was in this bracket. But how much more from the bottom end? From 45,000 to 50,500, I had an extra $5,500. That's the amount they're going to tax. They will take 32.5% of that amount to be taxed. That's what it is. Yeah? So, when we say income tax payable, this is how much you're paying in income tax. This is Medicare levy. So this is to keep the system running, along with all the other things that you're going to pay, but this is just one of them. We worked out to be 1,010. So in total for taxes, to keep this country running and services, we're paying 7,889.5 for this person. Make sense? Okay. Next bit. So when you do your tax return, you would have this person only submitted $500 in terms of claim. This is how much they need to pay in tax. But remember the early tax that I was talking about before? How much in terms of early tax did she pay? Because this is the employer. The employer does this for them and they follow a table. If you go back, this is why your payee tells you. She paid $5,200 early for the supermarket job, and she also paid $3,000 in tax early. So in total, how much did she pay in tax early? She paid $5,200 plus $3,000 is $8,200 in tax early. So if you look at it now, early tax was $8,200, but this is how much she truly owes based on our calculations in the table. The question is, will she receive a tax refund? Yes, she would, because she paid this early. She paid $8,200 early, but when it comes to tax time, ATO will sit down, look at all your income, look at your tax deductions, and this is what the number they will crunch out to. So when they crunch out this number, and they look at how much your employers have paid for you, they're like, oh, you overpaid. And because you overpaid, they'll give it back. That's why it's called tax return. Does that make sense? So from here, if we minused it to find out early tax was 8,200 minus the tax that you were calculating that you were meant to pay. So that's the tax pay. This is the early tax that your employer does for you. That difference is what ATO pays back to you. So here, on a calculator, 8,200 takeaway, you get $310.50 back. Does this make sense? This is called tax return. Does that feel clearer than what I taught yesterday? So yesterday was the table. I confused the table, but this is the idea. Income, tax deductions. So out of them all, this is what I meant. You yourself can only control the tax deductions bit. The more you increase this number, the smaller this number is. The smaller your taxable income is, the smaller in the bracket you belong. The smaller that you are in the belonging, the less tax that you're getting. You're getting taxed on. So it means you give them less. Get me? So that means your taxable income, what you're liable, is a lot less. Therefore, your tax return is higher.
So
Yeah.
it's going to be just over a bracket?
Well, technically, it actually doesn't even matter. Because arguably, you could also say it's better that you paid early because that means that the pay that you have is your money. Whereas this 310, oh sorry, was that 310? Sorry, that was 310. That $310, arguably they had that money the entire year. So in a way, you kind of almost not want to have too much of a tax return because that means that they held onto your money for a full year. But if you had your money for a full year, then it actually means you could have done anything in that year. You could have invested that money and make more money. So in some ways, people would argue that getting a tax return is not as good because that means you overpaid too early in your taxes and the government's been using your money for a full year and then you get it back and you're like, yeah, I made so much money, but really that was always your money. It's just that they held onto your money much earlier.
How did she know she was going to pay 8,200?
That one was from your PayG. So every year, once a year, at the end of financial year, your employer should give you a summary, and they call it a PayG. And your employers use the tables as employers to figure out how much they need to pay to the government early. So they pay on your behalf. So in your payslip, you will get a net pay, and the net pay means what your gross salary was minus tax. So you should always see a certain amount that's been taken off every single payslip. That is the early tax. That's the early tax that you paid so much earlier. And at the end of that 1 year, they will give you this summary. And then you know in total how much tax have you paid early. And that's why when you do your tax returns, your ATO essentially calculates this. But when you do your tax returns, the only thing you're doing is this bit. The deductions. There's nothing else that you're really doing. All this number crunching that we just did, ATO does that for you. The only thing you're really doing is this. This bit.
And how can you get a deduction?
So yeah, so that's the $1 million question. That's where accountants, their job is to know the tax law, and they know your job. You normally consult with them. You tell them, oh, this is what I do. This is what I earn. This is the amount of jobs I do. And they'll go, oh, do you drive here? You can claim this amount. And they can tell you how much you can maximize it. So they do it for you. But if you do it for yourself, then you have to research online to figure out what I can claim. So for example, as me as a teacher, if I spent money on this laptop, which I did, personally to use for this school, I can claim tax on this now. So I will put it as part of my tax deduction. If for some reason I had to buy this clothing as a part of a uniform for the school, I can then claim it because I didn't want to buy it, but I had to fork out my own money to buy this uniform for the school for my work. So I can claim back as work. So the things that I can claim, there's a list of things for each job and there's a certain amount of how much you can do it. Usually that's all on the ATO website, but that's why the tax accountants know more. And that's why I'm saying that most people can do their taxes by just clicking and they'll just minimize that. But the person who knows a lot about tax law, they can maximize that. Because the more you increase your deductions, the less your taxable income is. And therefore you pay less tax. In a way. Does that make a bit more sense there? Okay. Cool. All right, flip over the page. This is the last thing I'm going to teach today, so hopefully taxes make a bit more sense now. Flip over the page. I chose only the key terms that I think you might hear a bit more if you're out there working. Superannuation. On your payslip, you might already see every job that you apply for, your employers have to give you superannuation. The amount is 12%. That's the minimum. So 12% is the minimum superannuation that they have to pay for you. What is superannuation? It's money that you can access or set aside until you're around like 60 something. They're called preservation age. Okay, so there's money set aside. This is not your bank account. It's not your piggy account. It's just something that you put on the side, which is called a super fund, and you can't touch that money until you retire. Okay, so and it's not just you retiring from job. It's actually at a certain age. So you can't access the money until a certain age. So every job, whether it's part-time, whether it's casual or full-time, they all have a super that's attached to it. Okay, and it's 12% of the money that you get. So if you are looking for jobs on Seek.com, there is a difference between these two sentences, even though they sound very similar. See, one says 100K salary including super. This one says 100K salary plus super. This one earns more. This one is saying 100K plus an extra 12% of 100K. This one means you get a certain pay plus 12% of that certain pay and you get 100K. See the difference? This one's saying including, meaning we don't know what the pay is, but it has to be a lot less because you're adding on to get to 100. This one is saying you earn 100K, but then you get an extra 12%. So technically you're earning more than 100K. Two very different lines, just difference by one word. Yeah, so it's just something for you to understand. For those who actually are interested in working out, if you see these job advertised, if you want to know what the actual original amount is, write this in. Divide that number, 100K, divide by 1.12. And that just means that extra 12%. If you divide that amount, that tells you. So for example, thanks team. 100K, if you're seeing including, type on your calculator, divide by 1.12, that's how much you're really getting. Okay, so if they're saying that you get 100K salary including super, what they're really advertising is you're getting paid 89K a year plus 12% super, which everyone has to get anyway. But instead of saying 89K, they say 100K including super. It sounds better. Yeah? So there's a difference between them. So if you want to calculate it, it's just divide by 1.12. Okay? All right. So you got super, 12%. Can I get a show of hands who know what annual leave means? Only two. Yes, yes. Okay, annual leave. How much annual leave are we entitled to? Which one is it? 4 weeks. Some jobs will be different, but the number is 4. So 4 weeks in a year could be different from job to job. Yeah. But that's the standard. 4 weeks in a year is what you get as paid leave. What does that mean? It means that you can take holiday, take a break from work, and you still get income. That's what annual leave means. Yeah? So you get 4 weeks. Now, what's that 4 weeks? How do you get paid? It's 4 weeks of your normal pay. So whatever your normal pay is, 4 weeks in a year is what you accrue. Okay? Annual leave loading. Some jobs, like my job, for example, I do get annual leave. Okay, so I get my 4 weeks pay. So I get my paid leave, right, while I'm on holidays. But I get an annual leave loading. For certain jobs, some people miss out on like overtime work, or maybe they shift work or something like that because they have to take leave and they miss out on that. So to compensate for that, they add on 17.5% of your normal pay. So for me, I get towards the end of the year, I get 17.5% of my normal pay okay, just add it on to my very last pay. That's it. Okay, so you get this extra lump sum at the end. Yeah, so school holidays, you see, it's not that, let's say hypothetically I'm a workaholic. Let's say I do want to work like everyone else. I want to work 48 weeks in the year and I want the 4 weeks annual leave like everyone else, right? What's the problem is that you guys get holidays. But when you guys have holidays, I don't need to be in class. So even though I want to work, I'm not here. Get me? So there's no students to work with. Because of that, I'm forced to stay home. Makes it sound bad, but really, that's pretty much what it is. I'm forced to stay home. So that's why they have to add on. If I did extra work, am I getting paid for that? So if I worked, say, 3 hours on a Monday during holidays versus if I worked 15 hours, is someone going to compensate me for those hours that I work extra or less, right? And because of that, they give me what we call a loading. So the 2 weeks at end of term 1, 2 weeks at the end of term 2, 2 weeks at the end of term 3, and then the 3 weeks, because you get 4 weeks normally for everyone at the end of year, plus the whatever left over that time. That's where my 17.5% comes in. Get me? So it's the idea that I could have worked, but because I'm potentially working overtime and I'm not getting compensated for that, that's why they put in that extra 17.5%.
How many weeks?
4.
School holidays. You get 4.
That's what I'm trying to say. So it sounds weird, but you got to think of my job as, because yes, just like everyone else. So if everyone gets paid, I'm going to do term 1, term 2, term 3, term 4. And then I'll do another line. This is the normal people. 9 to 5 job. Right? They get towards the end, they get this block 4 weeks of the 52. Yeah? So altogether, that's 52, yeah? So they work 48. They get paid every single week in that 48 weeks. True? Same thing with me. I'm working the same thing 48 weeks in that year, and I still get my 4 weeks here too. The only difference is that because students get a break. Students get a break. Students get a break. Students get a break. True? So in these breaks, I'm getting paid just like these people, where they're getting paid every single week, just like I would for 48 weeks. Get me? The difference is that in this case here, because you guys aren't here, then therefore I'm not here. But in some schools, so I do know in some schools, there is an assumption that technically if the principal calls us in, I have to work. So some schools will actually call in where they do like a holiday program. So then the teachers have to come in because I'm still working. I'm not holiday. I can't say to the principal, oh, I've got 2 weeks holiday though. You can't do that to me. No, they can, because contractually I'm paid 48 weeks. It's just that most principals are like, all right, well, kids are off, teachers are off. But technically they can. So each school will be slightly different, where these breaks aren't really breaks. It's breaks for you. It's not technically breaks for me. It just so happens that if you guys are on breaks and then the school trusts that I will be ready for term 2, they're like, you do what you need to do. Then I can sit back and do whatever I want. But the idea is that in terms of money-wise, they're paying me 48 weeks, just like these people getting 48 weeks in a year. It's just that the nature of the job is different. That's the difference. Yeah? And then, so therefore, the same thing with that break. It's almost like everyone starts early Jan. They start their job to get paid. I'm still in my break because you guys are still in your break. So I still get paid. But my holiday loading is only this bit. So my 17.5% is here. Okay, and that's to make up. But what if I did want to do extra work? I'm not getting compensated for doing extra work. Whereas these guys, if they do extra work, if they did an overtime here, they do get compensated straight away. I don't. I don't get compensated. Even if I work 20 hours in each of those breaks, I don't get compensated all the way. So they just do a simple 17.5% at the end of the year. But these guys, the more OT you do, the more you get paid. So technically, I prefer this, because then I get all the hours I spend on camps or anything else I do gets compensated. But most times, I get the same normal pay, even if I worked more than 8 hours or less than 8 hours. That's the difference. Does that make sense? Cool. All right. All right, so annual leave, you get 4 weeks. Annual leave loading, some jobs, sometimes they have certain conditions that they do add on 17.5% of the normal pay. So here's your last example to get your head around super and annual leave. Sarah works full-time at a supermarket. She earns $800 per week and works 38 hours per week. So it's a standard 9-to-5 job, right? She has only worked at the supermarket for 6 months. So let's calculate now. What's Sarah's hourly pay? So you know in a week, she works 38 hours per week and she gets paid $800 each week. So how would you work out her hourly pay? How'd you work out the hourly pay? So you know that she gets paid $800 per week and she works 38 hours per week. Very good. So here we go. 800. How much she gets paid? Divided by the number of hours that she spent. 38. 800 divided by 38. Here we go. She gets $21.05 per hour. Yeah, probably. But you know. Yeah, I don't know. I made up the numbers, but that's true. Yeah, I just wrote some numbers in. I didn't really think about it. That's true. It's a bit low, but it does the job. Next one, Sarah's employer contributes. Now, remember when they do your pay slip, your employees must pay your super. They have to do it. Okay, so not only do they pay you $21.05 per hour, they also have to add on a 12%. That's just across every job that you're in. Okay, so how much does the employer have to factor in as well? Not only are they paying $21.05, they're also paying 12% each week of $800 extra. So let's work it out. 12% means 12 divided by 100. Of means times 800. So they're paying $96 into super. So every week, an extra $96 will go into their super fund. And they can access that when they're about 65 or so. Yeah? Next line. After working for 6 months. Now, I think this part here, some students may not realize how easy it is to work this one out. If you worked only for 6 months, how many hours of annual leave does Sarah accrue? How would you work this one out?
2 weeks.
What do you mean by 2?
2 weeks.
2 weeks, but how many hours? Because remember, when they work out your pay, they're working in hours. They're paying you on an hourly basis. They don't pay you in weeks. They pay you on an hourly basis. So how much in terms of weeks? I mean hours. How would you do it?
You have to divide how many hours. 38 divided by 5.
Oh, I see what you're doing. Don't do that. That's the wrong way to do it. Say it again. Is that 24 days? Is that what you're doing? 24 hours?
14 days.
Also, wrong approach. So remember one of the lessons I talked about, don't convert it to days and then weeks and months. There's only a few numbers that you got to remember. In a year, there's only 52 weeks in a year, and there are 12 months in a year, and there are 365 days. Don't use the other ones in between. Okay, don't do the 7 days or 4 weeks in a month. Don't use those. These are the numbers we work with. Yeah, so usually we bring it back to the 52 to figure out. But in this case, remember, how many hours does she normally work each week? It's 38. So if she works 38 hours per week and she gets 4 weeks in 1 year of annual leave, so then 6 months is half that, which you told me is 2 weeks. But 2 weeks, each week is 38 hours. Get me? So each week is made of 38 hours. So how many hours of annual leave does she get paid? It's 38 times 2. That's the number because that's how much she would have got paid normally. Get me? So that's the leave. So when she takes a break for, I don't know however long, so 6 months, she's accrued 38 times 2, or you can think of it as like 38 times 52. Sorry, 4 times 38 times 4. That's how many hours she's accrued in 1 year. Okay? But then if I'm working only 6 months, I get half of that. So 152 divided by 2 gives me 76. Does that make sense? So from here, remember, 4 weeks equals 1 year. So 4 weeks of annual leave in 1 year. So if you have half a year, you get half the weeks, right? But in 1 year, how many hours is that? It's 4 times 38, which gave me 152. So she's accrued 152 hours if she worked a full year. But she didn't work a full 152 hours in a year. She only worked 6 months. So that's why it'll then be half times 38. Oh, sorry, not half. It'll be half times 152. 76 hours. Or logically, you could have said 38 hours per week. So 2 weeks is double that. You get 76. Okay? And the next bit, D. 2 weeks of annual leave. So now I want you to think about it logically. If Sarah decides to take 2 weeks annual leave, meaning she's going to take 2 weeks holiday, she's entitled to that. How much will she get paid? How would you work that out? That's it. That was as simple as that. You already know each week she's going to normally get paid $800. So if she's taking 2 weeks annual leave, it's still the same. It hasn't changed. It's still $800 per week times 2 weeks. But that's what I find interesting. A lot of students get confused by these two lines. Annual leave is nothing different. It's just what you accrued. You accrued 4 weeks in a year. Just work out your hours per week. That tells you how many hours in a year. And you can work out how much you've got after how many times you've worked or how long you worked. This one, that's even easier. If you know how much you're getting paid each week, your annual leave, you're just not working and you're getting paid. Yeah? So it's not like my pay increases during term break. During each term break, I still get the same pay. I'm getting the same whatever I normally get per week. Okay? Lastly, just to get you understanding the holiday loading, if she did get an annual leave loading, 17.5%, you just had to calculate her total payment for the 2 weeks. So it's $1,600 plus 17.5% of what she normally gets paid in 2 weeks. And that's it. I want to pause there because, again, it's another very long session today. But I hope I clarified tax super. And maybe you got an idea of annual leave and how you would calculate that. But everyone gets 4 weeks. So no matter which jobs you guys are doing, yeah. The only exception is if you're doing casual. If you're doing casual, you don't get annual leave. You don't get sick leave. You get personal leave, carer's leave. You don't get any of those. But that's why they have carer's loading. That's why, casual loading. That's why the casual is like more. The rate is more because they're compensating for the fact that you don't have your leave. That's why.
How much sick leave do you get?